looks like, Kim, that's your question, is what's my overall view of the markets? You know, if we're talking about an overall, of course that's going to bring me to the market pulse. We know that. And as long as we're talking about the market pulse, I think we have to talk about what's happened to the dollar index. This is a 30-minute chart of the dollar index with the wave and our lazy days lines. And if you take a peek at what we're dealing with, this is going all the way up to the 1597 up here at 85. Take a look at how great the resistance was here at 80, and also the fact that the 144 lazy was waiting up here at 80 as well. We know 80 has been a huge decision level going back. Let's hop over to the daily chart. You'll see what I mean. Squeezing those lazy days lines. So yeah, if you go back, we know that 80's been a player for a while, and here we are bouncing off it again. Notice that we'll be watching these areas back here where we kind of topped out before. 80 was definitely a line in the sand after the summer breakout through the 200 period simple moving average when we broke out back here. So in terms of why and when 80's been something to watch, we had 80 at this point. When we broke 80 from that resistance through summer, okay, and then we have 80 again right now. So I think it's pretty interesting in terms of, you know, this figure in general and why we've got to be watching it. This area right here, that 80 figure. So that's the first look at what's going on. I think also, of course, when you take a look at this breakdown here through the wave, once we broke down here, you can see we turned over so sharply, and this was definitely a wave CCI situation for sure, right? So once we turned down over here, broke, this was 84, broke the bottom line of the wave. Back then it was 84.86, just below the 85.00. I mean, talk about a turnover. So, you know, you would think, and this is where it gets really interesting, you would think that the crude oil market has really been rallying with this weak dollar. Not at all. We broke 40 today. This is a huge day for crude oil. Huge day. Take a look there. So as we go through our market pulse charts, notice this is not a situation where we're talking about that inverse relationship between crude and the US dollar. Not at all. Which, you know, in terms of the economy and in terms of this ever weakening dollar right now, lower crude prices, a break below 40 back. I mean, we have shed $100 per barrel off the price of crude. I mean, that's a huge psychological breakthrough. 40 and $100. I mean, just insane. But I think the main thing to keep in mind here is the fact that the weakening dollar is not pushing crude oil higher. All right, how about the Dow? What's going on here? I'm going to use the Dow Mini and use a continuous contract here for that. All right, and we'll use that here in just a moment. Actually, it's being a little fussy. Let's go to the Dow Industrial then. Let's see. Okay, so what's happening here with the Dow Industrial? Just consolidating. You know, squeeze in that December to December look, and you'll see what's happening to the market cycle. Right? We're absolutely neutral, aren't we? We've taken that shift. We've turned the corner from what was that downward angle. So remember, we were moving down pretty steadily for a while, for a good while, right? And it's been broken now with this new clock angle. So that's good news to anyone who's waiting for this Dow to cycle out of this persistent downtrend. This is the first few steps into what could be the consolidation below 9,000. Most likely, yes. You can see the resistance that we continue to see below 9,000 right here. So we've tested it. It was once we tested it. Okay, we tested it again right there. So as long as we continue to see resistance in this area, I'd I'd say we're going to continue to consolidate. What's another really good sign here for anyone who's looking for some sort of recovery? A series of higher lows. See that? 1, 2, 3. Series of higher lows. So what's happening here? This is really developing into an asymmetrical triangle. Resistance there at 9,000 and dynamic support. Good news for anyone who's looking for any kind of relief from what's happening here in the stock market. Okay, so looking at the dollar gives us an insight into majors. Looking at crude, of course, the dollar, and taking a look at what's happening in COMDOL, the dollar Canada. And then now the Dow, which we know has had that relationship back to the dollar yen. And then finally we can take a quick peek at gold. Right now the Dow is down 168 points. And here's another strange situation where typically when you see a weakening Dow and a semi-weak dollar, you'd expect gold to rally. Gold is down $13 today, $13.50. So on a day that the Dow is down over 100 points, about 160 right now, gold is down 13. The dollar's not even up a full point. It's only up about 0.68. It's not up a whole figure, I should say. So is this typical holiday type trading? Maybe, likely. I think another thing to take note here, and this is a look at gold in particular, is what happened when we hit the 200 period SMA right there. We hit that 200 period simple moving average. We didn't stop and turn on a dime, but you can definitely see the resistance and the pressure there at the 200 simple moving, which is at looks to be 860 something. No, let's see what that level is here. Let's take a peek at where that's plotting right now. Yeah, 863.7. 863.7. So good to know. And that's where we're finding resistance right now on the gold market. So there's your look at what's happening in the larger markets, and we know the relationship back from the market pulse to the majors and the COMDOLs. And we were talking, I'm just going to mention the fifth beetle here, Fed Fund Futures. We know what's been happening there. We talked about this better than a month ago, the likelihood of definitely a 50 basis point cut and likely a 75, and that's exactly what we got this past Tuesday. So there's a full look at dollar, crude, Dow, gold, and then, like I said, the fifth beetle, Fed Fund Futures.